So if you're a first-time buyer or you're really early in your mortgage journey and you've looked at your mortgage statement and gone, hang on a second, I've been paying £1,200 a month for the last year and I've only cleared about £14.73 off the actual mortgage. It feels like it's all interest. It's like the bank is just sat there stroking a white cat and going, excellent, another payment. But here's the thing, it's not a scam, it's not broken. And actually it's the way it's supposed to work. So let's say you borrow £200,000 on a 25-year repayment mortgage of 5%. Your payment's going to be roughly £1,169 a month. And that payment's fixed for, say, 5 years. But here's the key. Interest is charged as a percentage of what you actually owe. So at the start, you owe £200,000. 5% of £200,000 is £10,000 per year in interest. That's about £833 per month just in interest. So in month one, £833 goes to servicing the interest, and about £336 goes into reducing your capital. And that's why it feels slow. You are paying it off, but very gently. But now here's where things start to change. Next month, you don't owe £200,000 anymore. You owe £199,664, and the interest is 5% of that, which is slightly less. So maybe £831 instead of £833, but your payment is still £1,169. So now slightly less goes to the interest and slightly more hits the capital. And that happens again and again and again. And then the magic happens. This is where it all starts to speed up. Every month the capital reduces, the interest reduces, the payment stays the same. So more and more of your payment starts smashing into the capital. And by year 15, it's completely flipped around. Now most of your payment is reducing debt. The mortgage doesn't crawl along for 25 years. That capital payment accelerates. So now let me show you something really powerful. In year one, you're looking at around £4,000 capital paid, £10,000 interest. But by year 10, now you're paying £6,000 or £7,000 of capital annually. And the final years, it's almost all capital. And this is why people say it feels really slow at the start, because it is slow at the start. But mathematically, it has to be. But this is actually where it can get quite exciting, because if you overpay, say, £200 per month in year one, that £200 comes straight off the capital, which means less capital, less interest charged next month, which means more and more of your normal payment is going into paying the capital, which means it accelerates even faster. Overpaying early is like kicking the first domino a whole lot harder. So on that £200,000 mortgage, £200 extra per month from day one could cut years off your term, save you tens of thousands of pounds. But £200 in year 20, it's still helpful, but it's just not as dramatic. Timing really, really matters. So if you've ever felt like your mortgage just isn't moving forward, now you know. It is. It's just building momentum. So here's the big takeaway. It's not that you're only paying interest, unless, of course, you've got an interest-only mortgage. It's that the interest is calculated based on what you still owe. Every single payment changes that calculation, and that's powerful. So if you want to understand how overpayments could affect you, whether shortening your term is going to make sense, or whether your current deal is still the right one for you, give me a like or follow. My links are in the bio. Drop me a message. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor serving clients up and down the UK. Speak to you soon. Bye-bye.